All right, it's just gone 11 a.m. So good morning, everybody. Thanks for joining us here today. We have a spectacular lineup for the MST Access, combined with NWR Communications hosting the emerging copper rock stars, the companies that are close to production or in production today, and the companies that we think will be the great copper companies of the future. A really good lineup. We're looking forward to going through those, but we're going to kick off here with Mr. Chris Drew, the Chief Resources Analyst at MST Access, who's going to give us a bit of an overview of the copper sector as he sees it today, an outlook on that, and the companies that we've got lined up. So Chris is just setting up his screen. Over to you, Chris. Good morning.
Thank you very much, Pete, and good morning, everyone. Thanks very much for joining us today. Yeah, I'm Chris Drew, one of the metals and mining analysts with MST Access, and delighted to be working with Pete and the team at NWR Communications to bring you an emerging copper rockstars webinar today and tomorrow. So first thing I'd probably like to say is we ran a similar event in March, and I think if you'd bought all the stocks back then, you'd have probably doubled or tripled your money in some cases. So I guess the key message from the next day or two is to buy the stocks that are presenting. It's a good outcome, I think.
Yeah.
You are going to hear from a range of companies. We've got pretty much a full spectrum covered, from early stage explorers with some great assets like Sunstone and Blackstone. We've got some slightly more advanced developers, names like Coda, American West Metals, and then we've got guys ready to transition into construction and production with Orion, KGL Resources, Cyprium, and up first we're going to have our producer at Hillgrove. So, and we've also got a bit of gold thrown in the mix, which is obviously topical right now with a few of the companies presenting having copper gold assets. So hopefully something for everyone joining us over the next couple of days. So I'd like to thank all of the speakers for taking the time to join us today. I know they've got plenty on, they're all busy. So really looking forward to getting an update on the names and where everyone is headed. Before we get into the presentations, I'd just like to take the opportunity to have a quick intro to MST Financial for those that are a little bit less familiar with who we are, and I'll set the scene with thoughts on why we think copper is a great space to be looking for mining investments. MST Financial, hopefully you can see the slides there. We're a research-driven full services, financial services sort of stockbroking platform. The research we do comes in two key platforms: our institutional research through MST Marquee and MST Emerging. We're around 13 analysts covering 120 stocks in that part of the business. Of those analysts, there's around 8 top rated in the sector, and that's a leading amount across the street. So pretty impressive position there for MST, I think. And then secondly, we've got our small cap company sponsored research. That's MST Access. We've got around 9 analysts. Most of us have sort of 20 odd years in the market, covering around 85 stocks in that part of the business. So often surprises people to learn that we cover more stocks than any other investment bank in Australia, and we've also got the most top rated analysts. And I think we'd argue we've got a leading team of analysts across the street, and that's a function of and reflects the research focused nature of what we do. So, for a bit more info on MST and the stocks we're covering, just take a look at our website. It's all up there. Secondly, now we'll turn on to the commodity theme for today, copper. Look, it remains one of our preferred exposures across the commodities spectrum. We see a number of themes playing out to support this. I'm just going to hit a few of those at a very high level in a couple of minutes before we get into our speakers today. So firstly, I'll just touch on the supply side of the equation and see here a couple of fairly established trends that people are probably a bit familiar with. You've probably heard about these. The first chart just shows we're simply not discovering as much copper as we used to. So since that could change its exploration, but the trend over the last 10 to 15 years there is very clear. Since around 1990, of the 239 discoveries of deposits that contain more than 500,000 tonnes of copper, only 4 of them have come in the last 5 years. And of those 239 deposits, only 15 have actually moved into construction or production. So that means we're increasingly reliant on existing mining operations to deliver more and more copper. And here, the chart on the right shows that growing production out of that existing asset base is going to be challenging given the grade decline that we're seeing. So from a supply perspective, clearly the pressure remains firmly on copper. Now, the next couple of slides are on the demand side of the equation. Now, we probably all know how closely copper is linked to sort of GDP growth. There's a couple of themes coming through that are starting to change that, I think, a little bit. So we've got emerging mega trends of decarbonisation and electrification. And what's important here is that we're not just talking renewables in terms of copper demand. Whether you're building gas or nuclear or coal, you're still going to need plenty of copper, and grids themselves are going to need plenty of copper to handle that electrification. There's also demographic drivers sort of underlying some of this as well. It's not just Western renewables. You've got 7 billion people in the sort of essentially the rest of the world outside the sort of slightly more fortunate 1 billion of us in the West that are all seeking better access to energy and electricity as well. And that's copper intensive. So these sort of longer term drivers are going to continue to support demand. Now, the second area on the demand side that I think is changing things that I want to touch on, again, probably heard plenty about this with data centers and AI. At the moment, this is something like less than 1% of copper consumption, but at reasonable levels of copper intensity, growth in data center capacity, we're going to see that lifting to 2.5–3% of copper demand by the end of the decade. And the way things are shaping up with a sort of huge and ongoing build-out announcements, we're hearing that that's probably looking conservative. And that's just the copper in the data centers. It's not what we're going to need for power supply or associated power supply or infrastructure for these assets. So that's an incremental source of new demand that's just adding to that medium-term pressure we see coming in copper. So that's just a super quick look at a couple of key themes here. Definitely not an exhaustive list of drivers. We could talk about EV penetration. We could talk about what we're seeing in India, talk about the need for grid upgrades and maintenance, also all further sort of support of medium and longer term dynamics. In the shorter term, we've got support of inventory dynamics. We've got negative treatment charges and refining charges. That's really supportive for our emerging producers. We've got an unusually large amount of supply disruption right now. Some of the bigger names in the world sort of struggling. And we've got trade disruptions are certainly a risk. But I think more broadly, the short-term backdrop continues to be very supportive for copper. So to wrap that up, and what I want to leave you with today is that for a very long time, most of the 20 plus years I've been looking at the space, we've been talking about the supply side constraints as drivers of improving copper price. So those issues around grade decline, new supply aren't necessarily new. But what we've got now, and we're seeing it come through in the last few years and will continue to increase in terms of its impact, is these demand side drivers, decarbonisation, electrification, and more recently data centers, AI. That's a key change, which we think is going to see copper demand decouple from those historic plus or minus GDP growth type rates, going to result in medium to longer term tightness in the copper space. So what you ideally want to see for commodities to perform supply side constraints running into strengthening demand, and that continues to be the setup we see in copper. So I'll leave it there. Thanks very much for that, and I will hand it back to Pete to introduce our first speaker today. Thank you, Pete.
Thanks, Chris. And I'll break that down. High demand, low supply, price increase. That's pretty simple.
That's it.
All right. Thank you very much. All right. We are looking forward to having our first speaker today to join us. And we are being joined here by the Managing Director and CEO of Hillgrove Resources, Mr. Bob Fulker, who's been up pretty early with the dynamite this morning. And we're looking forward to hearing from him to tell us the strategy for Hillgrove, where they are today, where they're going, and why Hillgrove Resources is one of the emerging copper rock stars. Good morning, Bob. Thanks for joining us.
Thanks, Peter. How are you?
Good, thank you. If you'll just get your screen shared up, we can move straight along.
Yep, it's trying to share at the moment. So for some reason, it's still going around in circles.
Takes a second or two.
I'll just try again.
There it is. It's coming up now, Bob.
Okay, thank you. Good morning, everybody. Do you want me to start, Peter?
Yes, please. Let her rip.
Good morning, everyone. My name is Bob Fulker. I'm the MD and the CEO at Hillgrove Resources. And thanks for joining today. And once again, thanks to Chris and the team. It's a great session and lots of good people to listen to. Hillgrove's offer is actually full exposure to a fully permitted Australian copper producer with a clear pathway to scalable growth. We're operating, expanding, and unlocking value. And I'm excited to walk you through our story today. Hillgrove is in a strong position, and as I just said, we are fully permitted. We have zero debt. We're fully funded to expand our growth and our production to an operation of 1.8 million tonnes or greater this coming next year. We have a 3.6 million tonne plant running at 1.5 million tonnes per annum currently. The operation is generating cash, and this year we've invested heavily in our growth agenda. Our strategy is based on two clear, simple approach. Deliver KMN2's operational performance and grow the Hillgrove copper business. 2025 has been a turning point. We started the year at a 1.4 million tonne per annum run rate. We've exceeded this and are currently running at 1.5 million tonnes per year. We've accelerated the Nugent development ahead of our plan and within our costs and forecasts. And as of this morning, as Peter said, we fired the first stope in Nugent and it's on the ground. Over the next 6 months, we'll be progressively increasing the mining rate up to the 1.8 million tonnes per annum. And on top of all this, we've been getting some great exploration results that has demonstrated we need to commence the development of the Emily Star to further improve the utilisation of the installed capacity of the processing plant and to increase our copper production. And this is just as important as the production side is the cost side. Costs are under control. Our AISC is expected to decline, driving stronger profits and margins and free cash flow generation. In the first 6 months of this year, we delivered $15 million of operating cash flow whilst heavily investing in the future of our operation with $26 million of capital expended. On growth, organic growth is best. Capital efficiency and pathway for Hillgrove. The large installed capacity of the plant is our competitive advantage. And this is why Emily Star is so exciting. It's the extension of the known resource that was mined via the open pit that extends to depth. And all this is within our mining lease. I'll speak more about Emily Star in the future. Once we get our operations sorted at KMN2, then we can move on to inorganic growth. KMN2 is not just a concept. KMN2 is a producing mine with spare processing capacity located within the Adelaide Hills. We've got all the infrastructure. We've got the transport corridor just next door to us to actually produce cost effectively. We're generating operating cash flow and are growing our production as we lower our unit costs. And we expect this to improve our margins as we scale the operation. KMN2 mineral system is a large and is growing as we continue to drill the extents. Over the past year, we have been predominantly drilling Nugent in the Kavanagh regions, with some long exploration holes into the proximal mineral systems. The next minerals resource and ore reserve estimate will include an additional 49 kilometres of drilling and will be out in the coming months. To date, the most exciting intercept has been Emily Star. This hole has shown the stacked mineralisation mined during the open pit continues at depth, and this will be our next growth focus. Our first hole into Emily Star hit the inferred resource exceeding our expectation. Grades of 19 metres at nearly 2% with gold credits are very nice when considering the multiple mineralised zones and the depth extension potential. This is the opportunity to increase the mining rate beyond the 1.8 million tonnes that we're currently aiming for. Whilst this is still an inferred resource, it has got me excited. We have a virgin underground area we can approach both from the surface and from the underground. But we need to remain disciplined in our approach. Thus, we will commence development of an exploration drive over the coming months to establish an effective drilling platform to improve the resource confidence in the prior to committing to major capital development. We're taking a three-staged approach, which will progressively develop Emily Star Production Centre, allowing future production expansion. This gated approach is the first one, is to develop the exploration drive to within a couple of 100 metres of the mineral zone, then to drill the top 3 to 4 sublevels to improve our confidence level. Once this is done, we can start the major capital infrastructure. This will include some grade control drilling and some infill drilling, with a third being production, level development, and a third production centre within KMN2. This approach will stage the development of Emily Star as our knowledge of the resource improves and allows permanent infrastructure to be installed. As I mentioned earlier, this is the best use of capital that we have, taking KMN2 processing to greater than 1.8 million tonnes per year through organic growth, and we've only just started. We have multiple opportunities within the KMN2 lease to continue to expand, and the opportunity to bring regional material to the plant is economically viable due to the proximity of the rail corridor, which is only 300 metres from the plant. This is our untapped strategic advantage. In wrapping up, we have a new team. We are producing copper with a growing world demand. We have stabilised the operation and now growing production to take advantage of the large installed milling capacity. We are fully permitted and have a pipeline of on-lease growth opportunities within the footprint of the processing plant. We have costs under control. We are highly leveraged to the copper price, and we now have a balance sheet which will give us the ability to complete the Nugent development and advance the exploitation of the Emily Star opportunity. We're focused on execution, delivery, and growth. Thanks for your time, and I hope you enjoy the rest of the presentations. And I'll hand it back to Peter and Chris.
Thank you, Bob. Nicely presented, comprehensive story there. I'm going to hand over to Chris, who's pretty well-versed across your story. Chris, what do you think might be some of the questions that our audience would like to hear from Bob?
Thanks, Peter, and thanks, Bob. Great run through where everything's at there. Good to hear. I think I was wondering it might be worth touching on the benefits that you'll start to see once you've connected the Nugent and Kavana sort of ore bodies you've got once you get that second means of entry and exit, what that'll mean for the operation. Is that going to help out in terms of costs, production, that sort of thing? What's some of the sort of specific changes that'll enable for you?
The biggest improvement, Chris, will be the ability to move equipment between the ore bodies very quickly and very easily, so therefore improving the efficiencies. The second one is the fact that we'll have multiple mining fronts with Nugent and Kavana systems, so that we can actually decouple some parts of the mining system. So we'll be able to have development totally isolated to the production cycle, totally isolated to the drilling cycle for the production. And we've actually it has enabled us to get our diamond drilling ahead of ourselves. So with the last 3 to 4 months, it's enabled us to get our sub-levels in Kavana 2 levels below the production level. So now we're drilling below that production level to expand our resource into the future. So expanding those out is a huge benefit to decouple that mining cycle. It's also allowed us to get improvements in items like ore passes between levels, so we can actually get efficiency in the remote loading. And we've improved our production significantly over the last 2 to 3 months, just with those sort of improvements. And if I can add, Chris, and Emily Star is still a long way away, okay? But Emily Star will give us that third centre, and that is how we can actually get our tonnages right up to those higher numbers.
Yeah, okay, thanks. So it sounds like other benefits. Clearly this year it's been a bit more constrained with that operation. So having that sort of second ore body to mine and second means getting in and out hopefully will help. We should be able to start a truck loop as well, so that we'll get less interruption with trucks going up and down the same decline. So we can get a loop going to establish more efficiency there too. Great, thanks. And yeah, you mentioned Emily Star. So perhaps talk a little bit more about what we can expect to hear about there in terms of the development strategy. Is this something is it sort of like within 6 months we might start getting confidence that that'll come into the production to add another leg of growth, or is it a little bit longer dated than that? How should we, what are you sort of doing there, and how should we think about that? The general manager is going to hate me after I say this, okay? But I'm going to commit him to some stuff. But to me, it's around about a 3 to 5 months of development, and we'll start that within probably the next month to 2 months, towards the end of this calendar year. That will enable us to get to within 200 metres of Emily Star. So there's about 300 to 350 metres of development we have to do. And that will give us the ability to drill those top 4 sub-levels to an indicated or measured category. So that will lift our confidence significantly. That will give me the ability within the next 6 months to make the decision to start our major infrastructure, being the decline, ventilation, and start that development of Emily Star. It will take probably another, I'm going to say 3 to 6 months to get that first stope online. So it'll be in 2027 that we'll start getting Emily Star online, and that will take us above the 1.8. And I'm hoping it will take us over 2 million, but that's a long way off, and there's still a lot of work to do. So in terms of the resource at Emily Star itself, that doesn't necessarily need a lot more drilling to go into it by the sound of things. It's just getting over some confirmation. Yeah. Yep. So it's inferred at the moment.
The reason it's inferred is because a lot of the holes are from the open pit, and they're vertical, so they're not very well orientated. And what the geologists would like to do is get a lot of confirmatory holes in, and once they start getting that spatial orientation right, they'll bring all those into an indicated or a measured category. But they've downrated at the moment because of the orientation. But there's a lot of drilling in that top 4 sublevels that were from the open pit via both diamond and RC.
I've got a question here, Chris and Bob. You've been talking about the operational aspects of Hillgrove, which is great. You've got through that sort of the out of the risky area and into the operations. You're producing copper now. It sets you above a lot of your sort of still peer group. The register and the interest from institutional investors and offshore investors, how have you seen that change in the last 12 months or so? Are you feeling that there's more interest coming in, that there are larger institutions wanting to take position in the copper story and looking at companies such as yourselves to take advantage of that?
Yeah, great question, Peter, because the last raise we did, which is going to allow us to do the Emily Star and to complete Nugent, was a lot more interest. There was a lot more interest from significant institutions than I've had for the last 18 months. So people are actually seeing that this is a positive story. We got a lot of interest from both offshore and onshore, and what I'd call sticky investors. And I've had positive conversations with some of those post that raise, seeking to understand where we're going, what we're doing, and how that growth trajectory is going to come about. Exactly what I'm talking about today. So I think that people are getting more interested. I believe that what Chris said earlier about the copper thematic, it is there. We need more copper in the world to meet our demands, and I do believe that the share price will follow. So we've had a hard time the last 12 months. We're getting through it. We're starting to produce. We're demonstrating we can do operating cash flow. Now we've got that capital expenditure through, we can start to actually generate true net mine cash flow, and that will demonstrate in the share market.
The copper product that you're producing there, where is it going? Who's buying it? Is it all taken with off-take agreements? Is there short-term buyers in there? Is it long-term agreements? What is the setup for the copper you're producing?
Yeah, we've got a long-term agreement with an off-take partner, and it's a good relationship. They help us out with taking smaller parcels or bigger parcels when we produce it, and they have the relationship with the customers. 100% of our product goes into China, but that's with our off-take partner. It's their remit.
All right. Well, I think we've got most of the information we need from Bob today. Is there anything you'd like to leave your shareholders and the viewers with, Bob, as we finish up with Hillgrove Resources?
Couple of things, I guess, Peter. One is we have de-risked what you talked about before. We don't have that execution risk of building plants or of developing the underground. So we've been through that de-risking stage. We are producing copper. The production, and I've talked a lot about tonnes production. The copper will follow the tonnes because the tonnes brings the copper. But our production has increased and our efficiencies are improving. Exactly what Chris said, the opening up of Nugent is that first stage of the decoupling of the mining cycles to allow greater production and greater effectiveness. And Emily Star will just be that next big growth trajectory post Nugent. And I think we're on the cusp of delivering what we need to do to really show confidence to the market.
Thank you, Bob. Thanks very much. And for any other questions that people might have, please email them through. We'll make sure Bob gets them, and we'll be having a copy of this presentation for his audience later on. Thanks for joining us, Bob.
Thank you very much. See you later, everyone.
All right. We will now be moving to the next presenter today. Still got Bob sitting there. There we go. All right. Our next presenter today is Matt Fifield, who's the Executive Chairman of Cyprium Metals. Thanks for joining us, today, Matt. We've got a great lineup, and you're certainly a part of that. We had you on earlier in the year, and we're looking forward to an update here. So I'm going to hand it across to you to, do you have a presentation to share on the screen and take us through your company update?
I do. Thanks, Peter. And it's great to be back with you. There's been quite a lot that's happened from from the last time I was here. So let me just get oriented here. Can you see the presentation?
Just coming up now. There we go.
Yep, fantastic. Okay, so we're in a very interesting position after 24 and early 25, where we were trying to set a bunch of simple plans. We are actually closing this week on a transformative capital raise. So we raised $80 million, and that fully funds the restart of the cathode project. And it's a transformational capital raise for us. To remind people, and I'll go back through just a little bit of the history of who we are in case this is the first time that you've heard of us. We have a Nifty, which I'll spend a little bit of time on, which is a prolific past copper producer that we're restarting. So it's brownfield copper in Western Australia. And there are two phases to it. One phase is cathode, and we have a 25,000 ton SXEW plant, and then also concentrate from the remaining open pit sulfide resources. And basically, it's been a bit of a simplify our plans, execute them, and then put the capital together to put that into action. So as we sit here today, we're on the edge of cathode production. We expect to be producing inside 12 months. Here's a little bit more about the company today. This note that on the left-hand side, you'll see sort of the stats around our company. We're trading around 4.5 cents, public ticker CYM on the ASX. Pro forma our shares on issue for the closing that's happening this week. That puts us at about a $220 million market cap with an enterprise value of about $200 million. In this last raise, we had just a whole bunch of top tier institutions come onto the register, including Tribeca, re-ups from Paradise, Flat-Footed, one of our large shareholders, and then a host of ASX institutions, international institutions that I think are seeing the power of the brownfield restart in this copper environment. Within our asset package, we have everything we need to build a truly great company. The Nifty Copper Complex, which we'll spend more time on, has both cathode and concentrator plants, and we're working to bring those back on. Our second project is a project called Maroochydore. It's at an inferred resource stage, but it's very big. And then the third is we have a gift that keeps on giving, which is just a tremendous exploration package and grounds in the Patterson. So to help you get oriented to where we are, in yellow on the screen in front of you, you'll see our tenement package. The Nifty mine here is in the center of the screen. We're about 100 kilometers by road from Telfer, and on the other side of us is Woody mine. This is the western side of the Patterson district. And what we have here at Nifty is copper is effectively sedimentary hosted copper. And in its earlier in its life, basically Nifty produced from a large sedimentary hosted copper deposit, and it went through and was discovered because it's poking out of the ground. And it went through an oxide phase where it produced about 220,000 tons of cathode, and it went through a sulfide phase where it produced about 500,000 tons of copper in concentrate. Today we have about an equal amount remaining in the reserves that we see on site, and we're working to bring those back into production. The oxide phase, there was about 17 million tons of material stacked on heap leach pads and then leached through an SXEW plant, where basically the heap leaches get leached with sulfuric acid, goes through a chemistry set in the solvent extraction phase, and then ultimately comes over into the electrowinning plant where you see those sheets of copper cathode. And this operated for 15 years at a peak capacity of 25,000 tons I'll talk more in a second about what we're doing here, but this is what we're doing next, is turning this phase back on and releaching those heap leaches. In terms of after that sulfide phase ended, the pit ended in grade, but they needed to build a concentrator to send the ore to market. There was very high grade ore underground, and so an underground mine was built and a concentrator was built as well. All these pictures are from site earlier in the year. And this mill produced about 50,000 tons a year of copper at a peak rate of between 2.8 and 3 million tons a year from that very high grade underground. And ultimately, the high grade underground both was hit by falling prices and by running out of high grade ore underground. And so in 2024, we went back and took all of the drilling and put together a sulfide reserve of 83 million tons at 0.9%. And we're working on the mining plans and sequencing to bring that back into production. That PFS revealed $1 billion pre-tax NPV on capital of about $410 million. So all of that spent capital that you're seeing on the screen gets us quicker to the mark and steps over both time and money in bringing these units back onto production. Going back to the heap leach project, we also declared a reserve on the heap leach, and we're looking to bring the SXEW up partially to about between 6,000 and 7,000 tons of cathode production per year. And that means from on a JORC resource base, that's about a 4-year life. And then with the additional material that's on the heap leach pads that aren't qualified by JORC, it's about a 7-year life. And then there's tremendous amounts of resource within the open pit in the shallow phases that will also continue to feed the SXEW through time. So our PFS showed project metrics that you can see here on the screen. Effectively, this cash flow that we're looking for, it's a relatively simple project to refurbish the SXEW, is pumps, valves, cathodes, PLC control boxes, and most of the infrastructure, as you saw earlier, is intact. And we're working with a great team to put this together. Our ambitions, again, are to get through this first phase of restart and be producing cash very quickly starting next year on the order of $30 to $50 million a year. So how do we break that project down and where are we in it? There's really 4 elements to that project. The first one is reestablishing the heap leach infrastructure, which are all the drains and ponds that surround the heap leach. And that's generally material movement and replacing liners that are degraded. If you went to site today, you'd see that we're quite active in terms of putting this heap leach infrastructure back in place. That helps us not only with environmental compliance, but also being quick to the mark for the SXEW restart. The second stage is heap leach commissioning, and that's when, if you're ready to leach, once you have the infrastructure in place, the second part of it is being ready to recover, which means where you have the capacity to put acid onto the heaps and then have that come out into the drains and ponds and send that to the plant. The third one is the plant itself. And the plant itself is both the electrowinning plant, which is what you see on the right-hand side of the page, the cathodes coming out, as well as the solvent extraction plant. And as I said, it's basically off-the-shelf pumps and valves, and then also PLC controls and instrumentation. And then the fourth part of the project is really being ready as a team. Getting into the phase where we can produce cathode safely, compliantly, and have a team that understands what's on mission and what the parts of their jobs are. So when you really think about what we're up to right now, well, we do have site activities going on, the heap leach infrastructure, drains and ponds. We're looking at some of the long lead items around plant refurbishment, and we're working our way towards the heap commissioning and getting, and approaching that fourth element of general team and site readiness. In terms of the team that we have around the table, well, we have a lot of experience here. Nifty is a bit of an iconic hydrometallurgical plant, and quite a lot of the folks in the Southern Hemisphere in the metallurgy world, hydrometallurgists, have worked there. And so to a certain degree, we're putting the team back together. we have a partnership with McMahon for the Nifty site, and they've been operating site since early 2025 and helping us through the Work Health Safety Acts and procurement across the whole element. And the ambition with McMahon is to, when we get into the open pit piece as well, there's a whole lot of scope for them to start to dig into as we're putting together that the plans for the open pit. Decmil is a subsidiary of McMahon and well known for civil plant and infrastructure builds. And they're actually very focused on that third element we talked about, which is around the plant refurbishment and bringing a lot of their design and construct and procurement skills to the table for us. PPM Global is our commissioning agent, and they're operators. Within our team, we have operators that have run this plant before when it hit 25,000 tons. And within PPM and Newpro both, we have different aspects of the team that worked at Nifty coming back together around critical items like commissioning, startup, operational readiness, construction review, and verification. So the team is pretty well squared away, and that really helps both in terms of commonality of language and speed to execute. As we execute out that project, we also have our eye on restarting the open pit and thinking about the concentrator. And again, if the first stage for us is about developing a very robust cash flow profile from a pretty modest investment, where this gets really interesting is as we start to move into the rest of that large open pit resource, both the sulfide and the oxides that sit within the pit. And so looking forward to giving you more information on that as our plans mature and start to advance. Our PFS showed that effectively this open pit has quite a lot of scale and longevity, and that's about what you would imagine with 80 million tons plus in reserve and at 0.9%. So where we're sitting today, I think exactly in mid-October is we're really focused on getting that SXEW plan launched well, and then making sure that we can hit that critical transition to producer inside the next 12 months, deliver those 4 key areas, and then continue to advance the long-term story. So on the back of that transformational raise, we have the capital to do it. We've got the team to do it. We certainly have some terrific assets to start to scale, and there's quite a lot more to come.
Thank you, Matt. Pretty comprehensive, pretty sharp. And my takeaway there was what you're talking about with the team. I found that a lot of money's been made from in the junior sector from people that follow good people, good teams, good management. What is it about your team, not only the companies that you're involved with as partners, but also your internal people that you're most proud of, that you think can make a difference for Cyprium?
Oh, well, that's a great question. One of the things that's really interesting is Cyprium had a tumultuous past in 2023 and 2024. And I felt like we spent quite a lot of time playing defense. And then what's interesting when you're in this moment, Peter, is it's going from defense to offense in a way. It's basically saying, okay, great, we've moved through that gate and we've been talking about this for quite some time. Let's move forward and move forward aggressively. So from my perspective, I mean, I can talk to you about what I think is happening in the copper market if you're interested. But you're seeing all-time high premiums for cathode. It's a great time to be a cathode producer, emerging cathode producer. You're seeing very tight TCRCs. It's a great time to have long tail concentrate that we can put into the market. And so the market is saying move fast. And probably one of the things I'm really happy about with our team internally is that we have the maturity to be able to move fast, to be able to take a certain amount of risk and the assets kind of with the head start you have in a brownfield. It's very hard to get things perfect. And so you just need to have the courage to move. And we've been showing that courage. And so I think if you're thinking, as you look at Cyprium and what we're trying to do, our major strategic advantages are sunk capital. One, the unusual scale of our assets. Two, sunk capital. And three, the time that means. So you should probably be expecting, or I hope that you would expect, that we will move very quickly and try to create those wins and those small wins that add up into momentum and big wins.
Yeah, there's been an incredible amount of capital sunk into Nifty over the years, and the data that you must have at your disposal, it gives you such an advantage.
Yeah, it's really interesting. And in some ways, this story is about us achieving this first milestone and going to production. Totally get it. There's been quite a lot of people that have been skeptical about can this work and can Nifty come back alive? And I think that we've been showing through grit and resilience that we're continuing to lean in and making it happen and doing what we say we're going to do. But beyond the pure execution focus, I mean, every time we look inside the portfolio, there's just this, amazing things sitting there that nobody has looked at in 10 years. We got handed back the Patterson Exploration portfolio by IGO. They spent $24 million doing regional exploration. It shows some outstanding hits from all the dozens of high-grade hits that we have all across the place, and resources like Maroochydore. So it would be nice to be able to start to express how powerful this portfolio is outside of Nifty, and yet you got to stay focused on what's in front of you. So it's finding that combination within our team of being able to demonstrate what else is in the portfolio, but also being really focused and on mission around delivering the plan.
Thanks, Matt. Chris, is there any gems there that you think Matt's left out?
Yeah, Matt, a couple of things from me, perhaps. So we've talked through some of the focus areas on the cathode restart, and it's really exciting to have that pretty good line of sight getting into production. If investors are sort of looking at that development pathway, what are some of the kind of key milestones or key sort of news items that we should be watching out for over the next kind of year or so, so that we're on track and for that first production?
Yeah, that's fine. So there's a couple of small things, right? Like we're waiting on and expect to see from Jitsi. We put in basically a notice that we're ready to go, and we've been through all the regulatory pieces, and so it's a non-substantial notice, and we expect to see that back. So we'll have a little bit of news flow around getting those things, the smaller things, tied up. The major point, I think, Chris, when you think about this, is when we are leaching the pads, is there copper coming out of the bottom in sufficient rate? That's probably the single biggest item that we're looking at. The rest of it, the SXEW plants work, and there's lots of people that know how to, run them, build them, and make them work. And so it's about getting the heaps to perform. And that's probably the single biggest catalyst to know that we've moved into a different area. Outside of that, and this is again just down the cathode dimension, there's we still haven't signed the construction contract on the SXEW. We're doing some of the ancillary work around the edges, but that'll be a moment that's coming towards us. And then of course, first cathode. Then when you step away, I think the other expectations are we are taking a look at one or two. So one, we have maintenance drilling. And then two, we're focusing some of that maintenance drilling around the high value targets that we see. So we might get a chance to show Peter a couple of those things that I was talking about earlier, and that could be pretty exciting. And then but the other obvious one is we're bringing up our plans on how to reactivate the open pit, and communicating that cleanly to the market will be happening in the next 6 months.
Yeah, and perhaps on that, I think an amazing job with getting funded for the production restart. When we think about the funding for the concentrate project, how's that sort of work program progressing? I imagine there's a fair bit of interest in what you've got available there. Is that sort of something you're working through now, or is the cathode project bigger focus? What's happening on the sort of funding?
Yeah, Chris,
pathway for concentrate.
Chris, you follow us closely, obviously. One of the things about the equity raise that we just did was we retained the ability to bring on board a strategic partner. So within our offtake senior debt facility and all the rest, we have the ability to bring on board a 30% partner in Nifty. And that was actually very important. It was one of the things when we were considering the magnitude of the equity raise versus bringing on a strategic partner before we were really ready to and could prove out that we could execute. So there's two aspects to that. ultimately the open pit, I think, will still be largely funded, hopefully through bringing on board a partner. We don't need to own 100% of Nifty to have this be an absolute roaring success for everyone involved. We've been clear about that all along. So there is a healthy amount of interest. The challenge that we have as a management team is collating that interest and also executing on the main project. And so it's trying to strike that balance, if I could put it that way, of I think we'll be able to start working on that harder as we create that breakout and momentum and the project starts to track on the cathode side.
Matt, thank you very much for that presentation and those good in-depth questions. That gives us a bit more insight, and our audience will love to hear that too. So thank you for your time today and your presentation, and looks like you're at the right time, right space, and right project.
Thanks, Peter. Thanks, Chris. Appreciate the interest. Bye.
All right. Okay, Chris, 2 down, 2 to go. There's 2 good stories there, and some more to come. And in the box seat now, Mr. Dennis Waddell, who is the chairman of Orion Minerals. And Dennis, we're looking forward to hearing Orion's story. We've had some good ones so far. So have you got your presentation ready to share?
Has that come up?
It usually takes a little bit of delayed time to pop up, so we'll give it that.
Sorry. Let me just go back.
Just let everybody know we check this in the waiting room and all goes smoothly. And here it's gone smoothly as well, Dennis. So it's just come up now.
Okay.
All right. So let's hear from yourself and why Orion Minerals is one of the emerging rock stars that we should be putting our hard-earned into today.
Okay. Thank you very much. Thanks to Chris and MST and NWR for the opportunity to present, and also thank you to all those who are attending the webinar today. We appreciate it. Yeah, look, with Orion, it's a compelling story from our perspective. We've been involved in the Northern Cape in South Africa now for since 2017. We identified an opportunity in South Africa, and that was really on the back of very little work having been done in the Northern Cape. It's a highly prospective area for base metals. There's, going back through, I guess, when Mandela was in jail, the sanctions and so forth, there's very little exploration and development of new projects in the Northern Cape, for decades. And it's quite staggering when you look at the history of production and the opportunity for developing new mines and adding significantly to resources and reserves and production profile, which I'll cover off on as we run through the presentation. Just quickly, our primary listing is on the ASX. We're dual listed on the JSE, the Joburg Exchange as well. Interestingly, there's not that many juniors. It's a very different landscape in South Africa, but we have attracted a lot of individual investors as well as institutional investment. We've got about 50% of our shares held here. They're very fungible between the 2 exchanges. 50% here, 50% on the JSE, and importantly, we've now established a major shareholder base in South Africa. We have 23,000 shareholders, which is very pleasing. We get a lot of support out of the JSE, as I say, institutionally and from private investors. Our major shareholders, Tembo Capital, have been with us since 2017. They provided the initial capital to drill out the resources and reserves at Prieska, which I'll come to shortly. Obviously, the Delphi Group from Germany, Tom Bormann, an ex-director of Orion. He's a very strong supporter, has just participated again in the recent placement. Clover, a South African-based company, and then directors and the, as I mentioned, many thousands of shareholders, particularly out of South Africa. I'm chairman of Orion. I've been at the company for quite a few years now. Importantly, following the release of the feasibility studies for Prieska and O'Keep, but particularly Prieska, which is our, it's the flagship project for us initially, and then there will be the second development at O'Keep. Both projects are fully permitted, and there's, subject to the funding we're finalising at the moment, we will commence development in the very near term. Importantly, Tony Lennox has joined as MD about 6 or 7 months ago. Tony's experience is critical to the development of these projects. We're talking about a mine at Prieska, which is, was operating for 20 odd years, produced 500,000 tonnes of copper, 1 million tonnes of zinc. It's been mined down to about 1 kilometre, which is not that deep in South African terms, I guess, but it's, it's a major VMS ore body. Importantly, Tony has developed and operated many large underground mines, importantly including Palabora in South Africa. Tony ran that for Rio and Anglo for a number of years. He's got a lot of experience in South Africa, and he's decided he's so attracted to the projects in South Africa. He's made a move from Byron Bay back to Joburg, so that's showing some serious commitment from Tony and his wife. Importantly, he's got very good contacts and a great team of people that he's pulled together to assist us in going through project development, execution, and operations. There's multiple guys that are on our team now that have very strong experience in deep underground mines. On the board also, Godfrey Gomway, Patience. They've all got experience in the majors, one or more of them, whether it's Anglo, BHP, Rio, South 32, and so forth. Mark Palmer's a rep for Tembo. The projects that we've pulled together in the Northern Cape, as I mentioned, our flagship is Prieska. You can see on this slide the location. For those of you that aren't familiar with it, it's really, you've got Cape Town to the south and then Joburg to the north. It's a desolate terrain, very remote, high wind incident, sun incident. There's a lot of renewable energy being installed around Prieska, which we'll be able to tap into. The Prieska mine, as I mentioned earlier, has a strong history of producing high quality concentrates. And our second project, O'Keep, which I'll cover briefly in the presentation also, it's an amazing area. There's been 2 million tonnes of copper metal produced out of O'Keep and nothing for well over 30 years. In fact, there's been very little work at all there. Newmont and Goldfields post-war, Second World War, they've produced over 1 million tonnes of copper each, but there's been nothing done there for decades. It's just incredible, the opportunity here. We've pulled together a very large package of ground at O'Keep, and we've now got that through to full permitting as well. So I'll touch on that. In late March, early April this year, we announced the 2 feasibility studies. I just really want to point out Prieska, the main keel of the ore body, which I'll show you in a long section and a cross section shortly. The VMS body here is one of the largest in the world. It's runs over 2.8 kilometres, vertical limb. The vertical limb was pretty well mined out. There's a lot of remaining pillars, but the keel zone, back when they stopped mining, obviously, base metal prices had fallen. There were issues politically in South Africa, but also they didn't have the expertise back then when it goes into the keel zone and into flat mining without paste fill and so forth. In those days, it was problematical. So there was a lot of ore left. We identified that. We drilled 85,000 metres of diamond core from 17, 18, 19, and delineated 31 million tonnes. It's open in every direction. There's a footwall lode as well that we've intersected, which hasn't been tested yet. It's open again. But the important thing to understand here is that the mine life here was about 12 or 13 years. That's simply because it was expensive to drill from surface. We had up to 18 diamond rigs on the project during that period, and it makes a lot more sense now to as we develop the mine, refurbish the shaft, and dewater, we can then much more cost effectively drill out more of the inferred resources into indicated and proven, obviously getting them into reserve category. So the mine life here will, in our view, will be extended significantly once we develop the project and get underground. And I'll show you a couple of slides on that later to demonstrate the upside of this project. An NPV of 568, obviously at a lower, that was at lower copper prices. The cost of this mine, I'll show you a slide as well. Our operating costs are very low; they're in the lowest quartile. So there's an enormous upside at Prieska. Geotechnically, it's an amazing mine. You can drive around for kilometres without seeing a rock bolt. As I mentioned, the concentrate's high quality, and that's really what drove the interest from multiple metal traders and offtake parties. We announced recently Glencore have put forward a non-binding up to 250 million US, nearly 400 million Australian, for the development of the mine, and that's linked obviously to offtake. They're very keen to get the offtake, as a number of other parties were. That's a really important part of our development plans, which I'll touch on in the next few slides. At O'Keepe, there were a lot of resources there that were remaining from Newmont and from Goldfields. Unfortunately, we don't have all the data to include them in JORC resources, but the three that we have tested, no surprise, it's there. There are many more that and they've gone into JORC now, but there's many more that we need to drill out. So it's really a base case for O'Keepe. There's very significant upside there, which I'll touch on later as well. The jewel here for us is the red zone on this long section. That's the 31 million tonnes. The vertical limb, you can see to the right, there's that vertical limb, and then it goes into a syncline. It's that keel zone where it's quite thick zones of ore, up to 30 or 40 metres. That 31 million tonnes forms the basis of the once we get into full scale production. To the top left-hand side of that long section, there's a resource there which we call the uppers. Our plan is to develop the uppers initially and then stage the development into the deeps over the next 3 years or so. But we'll be in production once we complete the funding, which is progressing very well. There's a 4-week due diligence period. We're into week 3 with Glencore, and then there's a couple of weeks for finalising documentation. That's all progressing very well. So we expect to get into production within 12 months of finalising the funding, which we hope to do in the next couple of months. Just a couple of shots here of, we did trial mining in the uppers last year, and we've got 20-odd thousand tonnes of ore sitting on surface. We just needed to trial that. This was never been in mind by Anglo Vale, who operated here for 20-odd years. In that long section, you can see those green components there, all the remaining pillars, which were left there for geotech reasons. Again, that's something we can look at. Quite a few million tonnes that we will be able to recover in over time, but the focus is refurbishing the shaft, dewatering. You can see on the left there the evaporators. As I mentioned earlier, there's a very high wind incident and sun incidence in this part of the country. So evaporating, it's a one-off. The mine doesn't make water. This was due to over 30, 35 years of water ingress due to the farmers selling all the bunding for aggregate. So we've had this process now of just dewatering. We've sent a robot down to the bottom of the shaft, down to a kilometre. Everything's clear. We've tested all the steel work. Everything's in very good condition. There's a lot of infrastructure here. We've got a substation on site. We've got a rail within 40 kilometres away to every port in the country. The road system's excellent. We've also got, an airstrip, a lot of infrastructure. I mean, clearly we're going to build a new plant, but the plan initially will be, as I said, to develop the uppers. We'll build a smaller plant, 20-odd thousand tonnes per month, which will run for 3 to 4 years. And while that's underway, we'll be then getting match fit, if you like, and ready for the development of the deeps. And that'll be for a period of the initial 12, 13 months to develop the uppers, and then we'll dewater and develop the deeps over a following 29 months. And during that period, we'll build a much bigger concentrator. 2.4 million tonnes per annum, 200,000 tonnes a month to produce the high quality concentrates I referred to earlier. As I mentioned, the Glencore funding is critical. Right now, we're going through with Tony and his team project execution. We're well aware of the traps and pitfalls. We're ensuring we've got a very experienced team. There's a lot of infrastructure here. As I mentioned, Tony is very confident of getting this back into production. It's got a great performance history as well for 20 years. So we're very comfortable and confident that once we got the funding, we can get through to operational readiness. There's value engineering, and then build a smaller plant, and we'll be producing copper concentrates by Christmas next year. I mentioned the exploration upside, which I'll touch on as well. Just a timeline here on the left side, that's Prieska, 13 months to production for the uppers, and then 29 months to complete refurbishment or handling and the decline. There's 4 declines to the bottom of the mine. There will be a little bit of rehab work, but everything's in very good condition. As I mentioned, you can drive around for kilometres underground, and it's all in very, very good condition. And we are very confident that we'll be able to continue to refurbish the shaft and continue to develop at the deeps while we're producing concentrates from the uppers. I mentioned the optimisation work and the base case for O'Keep on the right. It's an amazing area. I know everyone talks about exploration upside and so forth, but if you look at some of the deposits that were mined here, 10 to 15 to 20% copper and no exploration work for decades. So we're really looking forward to generating cash flow and being able to apply those funds for further extensions at Prieska, but also at O'Keep. On the cost curve, Prieska sits down in the first quartile, which is very encouraging, gives us a lot of headroom. This sort of base case with O'Keep, as I mentioned, it was based on a relatively small resource reserve base, but that we can see that increasing very readily, and we will then be targeting getting back into at least the second quartile in due course. Just a little bit of background for what we're at with the funding. A few months ago, we did a small raise, an SPP. Then we went through the offtake partner selection. Obviously, Glencore have won that, and we're now working through the final DD and agreements. We already have in place some funding from, we've got another 80 million a stream funding from Triple Flag. So we're now coordinating that with Glencore and with the IDC, the Industrial Development Corporation, Parastatal Bank, which is very supportive. It is actually an equity participant at O'Keep. So between those 3 parties, we'll well and truly break the back of the funding that's required to develop Prieska. And over time, we'll then get into the development of O'Keep, which is a lot easier. It's a lot shallower, and post the optimisation studies, we'll then be looking to develop the O'Keep project. I'm not going to go through all of this, just to sort of demonstrate there's been a very rigorous process we've been through in terms of developing the uppers initially. You can see we've got our Christmas tree in there for December next year. It'll be, everyone will have their shoulder to the wheel as soon as we've got this funding in place. Project readiness is what we're all about, and that's well advanced, and we'll be able to commence development of the uppers, hopefully by the end of the year, early next year, and then production by the end of next year. And then you can see the program we'll be going through in terms of dewatering and refurbishment, then for full-on production of 22,000 tonnes of copper per annum and 65,000 tonnes of zinc. Just quickly on the upside I mentioned, it's an amazing ore body, VMS deposit at Prieska. You've got that vertical limb I mentioned, but importantly, and I'm not going to go through all of these, but we've got a program already ready to go, 22,000 metres for resource definition drilling, and then 72,000 metres for planned extensions. Importantly, it's open to the northwest, to the southeast. We've got the highest grade and widest intercepts sit at the southeast extension. We've done downhole EM on that, and there's a very big conductor sitting at the southeast as well. Obviously, the continuity of this ore body is excellent. It's not closed off. We've also got a footwall duplication at T5 there, intersected some very good grades. So we have a program ready to go as soon as we get down further into the deep, so that we can much more cost effectively drill out those extensions and extend the mine life. And just quickly on O'Keep, we've only drilled out flat mines north, south and east, and they're all open as well. They form the basis of the initial DFS for O'Keep. Importantly, there's areas around Carrulersburg Deeps. There was 1 million tonnes of copper recovered out of this area. And we've got all of that as part of our portfolio. We've got excellent targets set up. There's a geological association with what we call the Springbok Quartzite. Our geos have identified multiple targets associated with that. So we're very keen to look at getting into further extension of the known resources, but also to test some of these other very good targets that we have in front of us. So that is the snapshot of Orion Minerals. Thank you for listening.
Thanks, Dennis. It's fascinating when you see some of these old mines being refurbished, re-energized, and brought back into production when the previous large companies just, in a different pricing environment, had to walk away. It's fascinating to see what can be found, and it's an understatement to say you're in elephant territory. I believe also that government support and regulatory environments have been much more helpful these days for you. Can you talk a little bit about the operations in that area, access to personnel and experience and working with the government?
Yeah, sure. Look, when we first went over, when I first went over to South Africa, I must admit I was a little reticent to start with, but it's not surprising to anyone listening. I mean, South Africa has an incredible history of mining. A lot of the majors are there. They're still there. Long life mines. When we got hold of Prieska, it was just staggering that we were able to bring in within, literally a few months, 15 to 20 diamond rigs. We did, drilling down to a kilometre, wedging. Every intercept we made, had mineralisation. We intersected the ore body. These guys did a great job. They had a team they could bring in from the department to open up the shaft. We lowered people down the shaft. That was all set up. Safety is a big issue in South Africa, as it needs to be. It's done very professionally. There's an excellent source of mining expertise. With Tony also having worked at Palabora for many years with Rio and Anglo, and his connections there are excellent. We've got a very good relationship with parties who can secure not only highly experienced executives in the mining industry, but very experienced operational people. So we've already had up to 200 people on site in the past while we've been drilling, and we've been able to put that in place very quickly. The Minister for Mines, Gwede Mantashe, he actually worked at Prieska as a young fella. He was there for 8 or 9 years.
Wow.
He's passionate about getting it back into production. The whole Northern Cape is desperate for employment. We need to get these projects up and running. Also, just to ensure that we can demonstrate that South Africa is open for business. There is a strong support from the department. The Minister for Mines came to site recently with our entourage. I know he is committed to this. The Mines Department of Africa Down Under in Perth recently, the Director General for the Mines Department, and his deputy, and the Deputy Minister was here as well. They're waiting to see this project up and running, and they're very supportive. Anything that they can do to assist us, they're doing. It's done. There's no free kicks. You've got to do it all properly. They're very professional, but we're looking forward to getting this into production to demonstrate it does work. But as you point out, there is elephant country here, and it hasn't been touched. It's staggering that nothing's been done here for 30, 35 years. And then you look at O'Keep, as the next stage, and it just, there are companies in Australia that would, do anything to get hold of a project like O'Keep. Look, it's in South Africa. It's got its challenges, but I think people overstate some of the difficulties. We're fully permitted on both projects. They're ready to go. We've already mined the uppers and that trial mine, and we've got 23,000 tonnes sitting on surface. There hasn't been any issues with the department, being able to get services involved. We're promoting local businesses. It's been very effective to date, and we're ready to hit the ground running.
Well, the enthusiasm's coming through, Dennis. I can see that you're really pumped up to get stuck into this. And I'm going to ask Chris, what's the market missing here in terms of investment opportunity here at Orion? Chris, from your point of view.
Yeah, I think it's a little bit like what Dennis was just touching on. I think South Africa is a challenge for a lot of particularly institutional investors here. Things just get put into one basket, and they don't really look at what's underneath that. And I think consequently, particularly some of the institutional guys are missing out on some pretty big opportunities. I mean, clearly we've got a fairly amazing asset base, which is just Glencore's just backed it with $250 million essentially, right? So that tells you something. So I'd actually be interested to hear from Dennis on some of those things. People, we're hearing a bit about improvement in electricity networks. We're hearing about sort of improvements into the transportation networks. But hopefully it appears the government's kind of addressing some of these things kind of front on. What are you sort of hearing, experiencing, seeing with regards to some of those sort of operating factors that people might be concerned about from an external perspective over here in Australia?
Yeah, no, it's a good question, Chris. And I'm pleased to report that we haven't had an outage now for 18 months. We have a substation literally on site that's been upgraded by Eskom recently, so we've got all the power we need for the development of the project. We have, the dewatering is underway. That's happening now. All the evaporators. But I mentioned earlier about the wind and solar incident. I mean, to fly into Prieska now, you go, well, what the hell's going on here? There are wind farms and solar farms everywhere around our mine. So there's the opportunity here now where the government has deregulated the Eskom arrangement, so that there's a lot of independent power companies that are establishing backup support, and that's tapping into the Eskom grid, of course. So there has been a real shift. The mining industry took a view on this some years ago, and there's been a very collective commitment to assisting the government. The expertise coming out of the mining industry to ensure that the power grids and the systems are being maintained, and things are being upgraded, and that's been very effective. And I think clearly there's a good reason for the mining industry to do that, but they managed to dig out a lot of the old timers who were there, and they've come in to assist, who know everything, know a lot of the background, a lot of the history. We've done the same at Prieska as well. We've identified a number of the guys who were working there and mining there. They were just so disappointed when it shut down, but we've been able to call on a lot of that expertise as well. Just like we found out there's a massive gyro crusher at the bottom of the mine. That's a huge win for us, and things like that where you've got a lot of that history. But yeah, look, the government support, as I mentioned, from the Mines Department has been excellent. Industrial Development Corporation, their charter is to look at developing jobs, creating jobs and developing projects in the Northern Cape, well, generally in Africa, South Africa, but, the Northern Cape screaming out for employment. So, power-wise, we're very comfortable. The DFS has been based on just using Eskom. We've got a lot of the independent power companies that are screaming out for us to do deals with them, and that will happen in due course, and that will provide additional backup, but also cheaper power. But, one step at a time, Chris.
Great. Thanks, Dennis.
All right. We look. I just got one question came through from a shareholder. It's a fair enough question. 7 billion shares on issue, and what has that affected any institutional interest or any US style investment into the company? What is your view on the number of shares and how it affects perhaps the way you trade in different markets?
Yeah, sure, and that's a fair enough question as well. I mean, it's not ideal. It will get consolidated at the appropriate time. We've as you can see, I've been around the block a few times, so I've seen in the past when consolidations, it's important that we affect that change when it's underpinned by a very significant event. What the timing will be, it will happen in due course. But we just feel that, parties that want to invest, they ask the question. But if they like the investment, I mean, theoretically, it shouldn't make any difference. The value is going to be there, right? But it is something you're probably right too in the US. Looking at penny dreadfuls, if you like. But if they see the value, they're quite happy to invest, and we've experienced that. But that's something that we'll deal with at the appropriate time.
Yeah, I remember that question coming up with a stock I was involved with that they had about 5 billion shares at 1 cent, and management said it was an issue. That management was Pilbara Minerals and went up to about $6. Still kept the same number of shares. So thanks very much, Dennis. Great presentation, and once again, it'll be available to everybody who wants to see this later on. It'll be recorded. Thank you for your time today.
Thanks very much. All the best.
All right, Chris, there's some good stories here. Really enjoying this these stories we're hearing today, and some great copper companies. And the next one, similarly, and we have here Dave O'Neill. Dave, from America West. Have you got your presentation here to share for us?
I absolutely do. Yes, let me try that now. Let me know if you can see this.
Just coming up now. Thanks very much. Yeah, look, today, a great range of companies, some really good stories. Copper is certainly at what we think is the beginning of the upswing of a long-term cycle. So we're looking forward to hearing from the America West story. I'll take it away.
Thank you. Thanks, guys. And thanks, MST, for providing some coverage for us as well, which has done great. And I will caution people listening in, well, thanks for sticking with us and through the other great presentations as well. I'll try and be fairly quick, but fairly a lot to get through. We are in a trading halt at the moment due to a capital raise, so I'll just caution that. We had an offer come, 20% premium to what we've been trading at in the last 30 days. So that is going to position us well to progress the 2 projects that I want to talk about today. Now, we'll caution as well, I am traveling and I do have very poor Wi-Fi, so I'll turn my camera off and just speak. So if I do cut out, feel free to go and read up on the materials at a later date. Okay, so, and the 2 projects I want to talk about today is 2 of our portfolio. We've got 3. We've got the Storm project in Nunavut in Canada, and we have West Desert and Copper Warrior, which are both in Utah, which is currently ranked #1 sort of mining jurisdiction on the planet. So 3 projects, all North American based. I'll only talk about briefly Storm and West Desert today, but I encourage you to do more research on us after this session. But I will reflect on this photo just quickly because this will become more apparent later how we managed to be able to process this mineralization, this copper mineralization at a very low cost and highly efficiently. You can see it's very coarse. It's essentially copper sulfide, mostly chalcocite, which is 80% copper, hosted in dolomite. So 2 very distinct minerals and mineralogies, and also physical properties, which allow us to do what we want to do from the processing point of view. So what Storm is presenting is a very low capital, very near-term project and development project which sits in essentially a district scale copper opportunity, and that's very rare in the junior space. These kind of land packages are usually in the hands of majors, and us and our joint venture partner own it 100%. So I'll talk to the economics and all the other bits and pieces in a second, but you can see there, we're located in northern Canada, and a lot of Australian investors roll their eyes, but I can guarantee, and particularly where I am now, it's very easy to work up there. We are in essentially a mining district that I know is probably the northern equivalent to sort of Kalgoorlie, where there's 10 existing or past operating mines in the area, a lot of base metal mines and a lot into pre-development. But there's also a lot of exploration up in this part of the world. We're located sort of on a deep water bay, right next to the main shipping channel, and very close to Polaris and Nanisivik, which were both Teck and Minco and very profitable mines in their days while they operated. We use ship predominantly to get things in and get things out, and that's going to be the way we do it once we enter development. Just a quick snapshot on the economics and what this really has provided us in the PEA. And look, all these numbers, as the way copper's going, are going to be significantly improved. We did the PEA at 450, 460. Obviously, it's a lot higher than that now, so you can expect things better in the future. We're in the middle of a PFS, which will update these, but the key takeaways here are the initial capital. So this mine will be very cheap to get up and running, and Also, we've got some sensational partners in here to back us for most of 80% of this cost. So it's near term, it's very low footprint, it's very light on from an ESG perspective. So that's going to work in our favour in terms of permitting, and it's going to be very high margin. And just as the PEA presents, it's about $300 million it's going to make for us in the first 5 to 6 years. So that, as a company, particularly our size, is something very compelling. Now, I must point out as well that this is stage 1 for Storm. This is initial starter mine. That'll allow us to put this capital and deploy that back into the project and the district scale, and to grow this over many, many years. This is what stage 1 essentially looks like. All of the resources are very close to surface, if not outcropping. That allows us to mine highly efficiently, all open pit at this point. The initial resource is about 21 million tonnes, over % copper. The mining inventory at this point is about half of that, 10.3 million tonnes at a higher grade copper. But certainly the work we've done this year is going to increase that significantly, which will add to mine life, or it'll add to more copper tonnes out the door in the first instance on a yearly basis. So this is a real key to Storm, and why we've so Storm is a sediment hosted copper deposit. So that is unique. They generally sit in that 0.5 to 2% range. They generally form in that 250 million tonne range in terms of a camp, multiple deposits. And we're sort of sitting in that sort of grain range at the moment, but we're certainly not sitting in the resource range. So that's the potential growth here. But with that, it's very, very simple mineralogy. And so a lot of the VMS deposits are polymetallic. You need to separate those things hydrometallurgically. Given the sulfide is essentially copper with silver credits, it allows us to do this. And this is, it's world leading in terms of its footprint and its ESG credential, because there's no tailings, there's no reagents. It's very cheap, and it's highly effective because of the mineralogy. And like I said, it's essentially like we use ore sorting in the first phase, and that 70% of the mineralization and ore goes through the ore sorting circuit. That gives us recoveries in the 70 to 72% range. That's going to be significantly increased with the work we're doing now, which will obviously, again, provide better copper tonnes out the door. And the second phase, the fines go through a DMS circuit essentially. So it's one of the oldest technologies on the planet, almost like gold panning. So, given the chalcocite mineralization is twice the density of the host rock, that allows us to do this. As you saw, it's very coarse as well, which means we it's very simple to sort of crush, screen, sort into an ore and a waste pile. The other thing, the waste pile will contain some copper, because we do get slightly lower recoveries than the hydromet, and we are working on that, like I said. But we've shown that this stuff does float very well. So stage 2, depending on what that looks like, flotation is absolutely an option for that going forwards as well. Now, what really does de-risk Storm and American West Metals is our partnerships for the project. And very early on, we've Taurus invested and purchased essentially another 1.925% royalty for essentially $17.5 million. Most of those, 2 of those tranches have come in already, and there's a third tranche still remaining to be paid out, which is about $5 million Australian. And then that will also open the door for Ocean Partners to come in. So Ocean Partners is a global metal trading company. They are the experts in this kind of mineralization. They do DSOs out of Africa on a daily basis and move them worldwide. These guys have come in with an equity stake in the company of 10%, or just under 10%. They've come in for funding up to 80% of the Storm project development capital, that initial capital, which is essentially up to $40 million. And they get secured 100% of the offtake on what's been defined under the PEA. So that really does de-risk us in terms of the ongoing project, and actually having to build the thing and find a partner to do this at a later date. So we believe there's a very small delta between the capital. We can do that through, with Taurus's help and other means. We're looking at other ways of funding the project through the critical metal funds. There's many in Canada for process innovation, which would qualify critical minerals. And also in the States, a lot of the American ones also classify for Canada as well. So we're pursuing those options, so that we hope will actually offset a lot of the debt funding. comparison, we think we're undervalued compared to some of the great companies you've heard this morning as well. And I think there's significant growth in our valuation, but I'll leave that for you guys to sort of do some research in the interest of time. This is the opportunity I'm talking about. This is the long-term picture. So 2,200 square kilometres. We own 100% of the copper belt. And again, as our joint venture, and again, that's very, very rare. So, you know, again, if you talk about growth potential, we've highlighted a number of regions that we need to put more exploration money into. There's copper exposed at both ends of the belt and essentially along the whole prospective horizon. And that gives us the encouragement that this absolutely is going to be one of those sediment-hosted copper belts that falls into those hundreds of millions of tonnes over time. These things do take time to emerge and to develop. And that's what, you know, we're hoping that Storm Stage 1 can essentially pay for the exploration there. Once you have a mine going, the exploration up here is about a quarter of the cost because you're moving on the ground. There's less reliance on helicopters and aviation, and you know you're there essentially all year round. And so that's the opportunity here. That's what we're aiming for, and that's what we see a very long future for this project. Some of the intersections we're getting, we've got some, you know, the work we've done today this year has really shown that there's a lot more to be found, even in the immediate storm and tornado regions, and that's where I guess exploration will move out. There's gossans exposed along kilometres and kilometres of faults. We've got drilling that's shown that there's at depth that we're finding, you know, one of our holes at Cyclone Deeps hit 10 metres at 1.2% copper. A lot of these holes we're all getting that 2 and 3% copper hits as well. That shows that there is that economic mineralisation potential at depth. We just now have to focus and find those best parts of it. This gives an indication of what we see. You know, Cyclone deposits about 15 million tonnes on its own. We think we've found the second half of it potentially, and more drilling will be required to really define that and flesh it out. If that's the case, and it sits in that sort of 20 to 40 million tonne range, and that's a Mateo. That's $1 billion asset in Sandfire's portfolio. So you can see that they're, you know, quite quickly we can add tonnes to this by finding more cyclone size and style deposits. So essentially, you know, the catalyst for Storm coming up, there's a lot as the PFS stuff is very advanced. We're moving that quickly. That'll build into, you know, upgraded metallurgical and processing information and news in the short term. We've got an updated resource to come out, which you'll see most of that go into the indicated category and therefore into reserve. We've got the PFS permitting's underway. So there's two, I guess, phases of that. There's the exploration and there's also the development side of things, which are progressing. So lots of news there. We've got a lot of assays to come, and I apologise, you know, to some investors that may be listening in. They have taken longer. We've had to, because we're doing the PFS and we're doing some SGs and a lot of other bits and pieces, some of the assays have taken longer to come back, but they'll be out very, very shortly. And we're probably expecting, you know, hopefully weekly news flow from now until the, you know, the next couple of months, both around Storm and also West Desert, which I'll talk to now. Again, in the interest of time, I'll go very, very quickly, but West Desert is located in Utah. It's part of the Bingham Canyon Tintic Mineral District. We're only about 160 kilometers from Salt Lake City, so it's very accessible. It's in the Sevier orogeny, which is, again, hosts Bingham Canyon, and it's this is a porphyry-related system. So what we've found to date is essentially a zinc, copper, silver, indium, and gold skarn with a lot of other things, which I'll talk to in a second. But that's where the initial exploration's been done, essentially defined an initial resource, but only 10% of the porphyry margin's been explored. And look, we're not in the business for exploring for porphyry style mineralization, but as Bingham Canyon shows, as Tintic shows, these skarns generally occur in clusters around the porphyry. And so we've only found one to date. Now, there's a lot of good intersections outside of this. The upside that we believe is certainly in the critical metals here. So we're getting a lot of interest, and some of this capital that's coming in the next couple of days is around actually advancing West Desert as well. Now, some of this, so the initial zinc skarn sort of sits off the porphyry, but closer between the porphyry and the zinc skarn, zinc dominant skarn, we get these zones of, it's essentially a pretty tailor-made mineralization for today's market. So it's very high grade in copper, gold, and silver, but it also has indium and gallium, which we don't understand the extent yet. This is one of the world's largest undeveloped indium deposits, and it's the only one JORC compliant resource in the US. Now, the US is 100% net importer of indium, and its current suppliers are China, which has now cut supply off, Sweden, Canada, and some of those suppliers are drying up as well. So that puts us in a very good position to move this forward, again, through some of that critical metals funding. But you can see some of these grades. We get grades up to 12 grams gold. We get copper up to 4% copper, and there's even smaller intersections of 14% copper. But it's the indium and the silver here. We get multiple hundreds of grams per ton silver in some of these zones, and also in the indium. So this is exciting. We've got a few holes into this copper zone. Because it doesn't show up on the geophysics as well, there's a lot to do here. We've got a drill hole that's 1 kilometre east of the West Desert deposit, which has hit 3.5% copper, 8% zinc, and very high grade silver and indium. And that's a kilometre away, and it's completely open. So it shows you the scale of this project, but also the the intense valuation upside we believe in these rare and pretty hot metals right now. So we're going to move that forward. Again, that'll take a little bit of, as some investors would know, we generally seasonal at Storm. We like to do the exploration mostly in the summer and the spring there. This gives us the opportunity to have that sort of the year-round news flow, and to do some very, we're not going to just go out and drill all of this. We've got some pretty high priority targets that will first cab off the rank, and certainly these copper, gold, and high critical metal grade zones are certainly going to be the focus for us going forwards. So getting in the interest of time, now I must say this is a historical mining district. So most of the West Desert deposit sits on private land, which we own 100%, and it is an existing mine. So there's a lot of waste dumps in the area which can be reprocessed. Some of them are very, very high in silver and zinc and lead. So the potential opportunity there. We know certainly the government's approaching us and being able to recycle some of these old waste dumps. So that's an opportunity here that exists as well. And I might just leave it at that. So and open up to the questions.
Thank you, Dave. Plenty of action going on there across multiple projects. And I'd like to start with the last of the US projects first, galena, indium, even the copper there as well. The US seems to be in a little bit of in this last 12 months, a bit of a frenzy on its critical minerals policies. What sort of funding is available to a company like yourselves that's exploring for some of these or has some of these minerals in their portfolios? Yeah,
and look, it's not so much the copper, gold, silver. It's more the things that they don't have. Gallium and indium, germanium, antimony, all of these are 100% imported into the US. And so and look, to be honest, the indium is not the largest economic driver for the current resource. Obviously, most of the value is in the huge amounts of zinc and copper and gold, etc. But it might be that enough to really just unlock the door to some of these funding pathways. And so we've been approached by the Department of War now, Department of Defense prior, Department of Energy, and local government as well to move this forward, because there is a push. There is a shortage, and we're certainly seeing a lot of interest. And look, there's a couple of examples. I mean, the Copper Warrior project, which is southern Utah, that sits next to the Utah's second largest copper mine, Lisbon Valley there. So that they've been waiting for permits for years to develop the new pit of theirs, and that was part of that FAST-41 fast track, and that's now up and running. And so when the US decides to go, they move very, very quickly. Thanks, Dave. We've been joined by Michael Bentley, esteemed research analyst also in the resources space. Looks like he's got some questions to draw out for investors to listen to.
No, thanks for that credit there, Pete, of being esteemed. I appreciate that. Hey, Dave, look, thanks very much for the presentation today. There's probably two key questions I just want to sort of touch on. One of the things you spoke to was about, focusing on the development of Storm, which will allow you to, generate the cash, get on the ground, and then really hit the hit the rest of the project with a sort of a grand scale exploration sort of program. Is that, if am I reading that right? Is that the real focus on Storm at the moment, to get that into production as rapidly as possible?
Absolutely. So the PFS, once the hard numbers that come out from that, then we'll make a decision around those. Obviously, they'll be much more updated and relevant. So, but once that does, I mean, this presents, there's two things: the capital cost to get this going, and considering 80% of that's already funded, but also the the timelines. So the permitting timelines in Nunavut, we're 2 years ahead in terms of our long lead time, the baseline studies, the community liaison. We've got a fantastic relationship with the local community, which is 100 kilometres away. And look, just to reiterate, Storm is completely uninhabited. And so that gives us leverage. It's not 5 to 7 years like some mines, and it's not that hundreds of millions of dollars to get this going. So if that was the case, certainly we'd have to reflect on that. But this is an opportunity too good to pass up. And I'd go as far as to say, if investors remember back to the early 2000s, there's Jubilee and Western Areas, 2 nickel companies in Western Australia. Jubilee had 10,000 tonnes of nickel at Cosmos. They put a very high grade and essentially dug that out in a small open pit, put that money back into the ground, and ended up being bought out for $3.3 billion. And I think, again, if this was a very limited package, tenement package, then we might think again. But we've got a whole belt. We can't, if we were to spread ourselves too thinly now, we may miss this kind of opportunity. So look, some people want to see, the BHPs will probably wait till they get 2 million tonnes of copper metal before they move the needle. But for us, we can be small, we can be nimble, and it's very, very efficient and easy. And so it does present that opportunity. And so, again, I think, we don't build Rome overnight. If we can be a Jubilee or Western Areas in 5 to 10 years' time, then I think investors get a lot out of that, and certainly we will too.
Yeah, absolutely. Absolutely. And I think the other thing that the market kind of probably does miss a little bit is the fact that 80% of the project it's got committed funding to.
Yes, absolutely. And look, and we're hoping to offset that. So that's the worst case scenario where we borrow for 80% of that, and pay that back. But like you said, the critical metals grants are open to $50-100 million, and so those kind of checks are being signed. And you saw, look, Foran has got the McKelvin Bay, that's been pushed through from an environmental sense. So even in Canada, you do see a lot of progress in this regard. So look, that's obviously the preferred option to us, is look at the process innovation sort of and the critical metal funds, because they are handing out money at the moment. I think look, Storm classifies for a lot of these. And the other thing is work, and they are trying to promote the northern Canada, and because there is and mining's the biggest economic driver in Nunavut. And you go up there to the mining symposium, it's full of people. Agnego Eagle's up there, Teck, Baffinland, so MMG. So there's big companies up there spending a lot of money. So it's they want to see it move forwards.
Yeah, definitely. I think just probably the last one I just want to ask is it goes back to one of your first comments about when Australian investors look at this and go, oh gee, this is remote. But there's a really well-structured sort of transportation system up there that can get the product out very easily. You can mine 365 days a year.
Yeah.
So it's probably, it's probably less, in some cases, it's less remote than a lot of WA is in a way.
Absolutely. I mean, you look at Central Australia, the Wingalinas, the Nebo Babels, miles and miles from anywhere, and need 2,000 kilometres of roads. Base metals, bulk, you want to be on the coast because shipping is your friend up there. And you can only ship through, 2 to 3 months of the year, but that's the way it's done up there. So you think about, well, how do you operate big mines? You've got Red Dog, one of the world's largest zinc mines. You've got the iron ore mine up there. You've got Voisey Bay. You've got Raglan nickel mines. All of these are big mines, and they're moving huge tonnages of mineralization and ore, and they do all right. And the other thing to point out is, like, it's uninhabited. There's no trees. It's flat. That means there's no wildlife and things to consider. And there is some, and we're obviously absolutely considering all of these things, but it's not like you're in the highlands of Papua New Guinea, where, you've got high relief and difficulty. There is no road. So yes, it has its challenges, but again, a lot of these machines have been designed in that, Sandvik, so the drilling rigs, a lot of them out of the Sweden and Scandinavia and things like that. So operating in the cold is generally not, I won't say simpler, but it's easy to warm things up rather than cool them down like Central Australia. So there is a lot of benefits, I must say, and it's just becoming familiar with that, and having worked globally within BHP and these other companies, Western Mining, you get to see all these things, and that's what got us into these areas in the first place, is that these are the opportunities. And I found sometimes I guess you need that experience to be able to understand, but there is a huge mining industry up there, and we want to tap into it.
Yeah, very much so. That's all I've got, Dave, and look, good luck with the West Desert as well. That looks very, very interesting as well. Thanks for your time today, and back to you, Pete. Thanks very much, Dave.
Thank you.
Thanks, Dave. Great presentation. Thanks for joining us while you're travelling around. Came through nice and clearly, and we'll have a recording of this for you to be able to send out to your shareholders. They'll be pretty happy to hear your commentary today, and for when you come out of trading halt very soon.
Thanks, guys. I appreciate the time.
Thank you. All right. Well, Chris, that was a pretty good